afternoon to all our stakeholders. We're taking the opportunity to come in front of you once again to present our Q3 earning disclosure for 2019. Before we go into the details, I would like to just introduce all my colleagues present here along with me today. I'll start from the left. Mohammad Rafatullah Khan, he's the head of CRM. Next to him, Mr. A.N.M. Mahfouz, he's the head of consumer banking. Right after him, one of the veteran bankers and one of the veteran resources of the bank, Mr. Ghulam Rabbani, Deputy Managing Director and Head of Special Asset Management. Next to him is the new joiner of the bank, who's been with the bank almost for a quarter now, Mr. Faisal Rahman. He is the Deputy Managing Director and heading the corporate and institutional banking. Next to him, you all know him by now, Mr. Habibur Rahman Chaudhry, the Deputy Managing Director and CFO. On my right, Mr. Tawhidul Alam Khan, Deputy Managing Director and heading the commercial banking division of the bank. After him is Mr. Matiur Rahman, who is the head of treasury for the bank. Right after him is Mr. Abdul Halim, the chief operating officer of the bank. Next to him is Shams Mohaimin, who is heading the transaction banking and structured finance. Next to him is Mr. Jashimuddin. He is the risk management division head, and also heading the internal control and compliance. And lastly, Mr. Ibnul Alam Palash. He is heading the small business for the bank. At the outset, I would just want to give a two-liner on where the bank stands today. The Q3 results, as you may have already seen it, because it has already been approved by our Honorable Board of Directors and been published in the newspaper. This has been another impressive quarter for the bank, as we have been progressing since 2018 on a quarter-to-quarter basis. Quarter 3 of 2019 has also registered a very impressive growth in most of the numbers, and especially with the profit after tax. So without any further ado, I would request our CFO to get into the financial details and give you the earning disclosure.
Thank you so much. I'd like to start with forward-looking statements, which is a disclaimer from bank's part. We suppose that viewers is going to read it out and understand before taking any investment decision based on today's earnings disclosures. Before surfing through the financials, I would like to give a very brief overview on group structure of Prime Bank Limited. As you know, Prime Bank has started its journey in the year 1995, and currently under bank's umbrella, there are 5 subsidiary companies, 2 local subsidiary companies and 3 overseas subsidiary companies. Local subsidiary companies are Prime Bank Investment Limited and Prime Bank Securities Limited. Prime Bank Securities Limited is the track holder of both the bourses of the country, Dhaka Stock Exchange and Chittagong Stock Exchange. And overseas subsidiaries are Prime Exchange Company Private Limited in Singapore, Prime Exchange UK Limited, and PBL Finance Hong Kong Limited. Prime Bank offers both conventional banking in Bangladesh as well as Islamic banking business. And we do have offshore banking unit along with our onshore banking business. And this bank is not solely focused on its commercial venture. Bank is highly committed to corporate social responsibility too. And this corporate social responsibility is done by our foundation named Prime Bank Foundation. And we have very strong presence in health sector, education sector, and sports in Bangladesh. Now on financial part. In September 2019, net interest income has gone up by almost 11%, which shows more than 100 and incremental interest income of more than 155 crore. Out of this 155 crore, almost 96 crore has come out of incremental volume of loans and advances, and 69 crore has come out of improved net interest margin, which is very important to me. If you go through this line, you'll understand that in September 2018, our spread was 3.91%, and Q3 September 2019, it has gone up to 4.36%, registering incremental 45 basis points NIM. This was not easy in this very tight and challenging liquidity environment. The main catalyst behind this kind of improved NIM, in my view, was because of very prudent decisions our ALCO has taken time to time, considering the internal elements of balance sheet, and there are lots of other factors in the economy. And the most important thing is that we did not offer in the market very high interest rate on deposit in one side. On the other side, we have been able to maintain our very solid liquid position in our balance sheet. And that is very much evidenced in our advance and deposit ratio. We started this year at 82.65% of AD, and now it is 78.37, meaning we have been able to maintain our liquidity positions. And this surplus fund we have invested mainly in treasury bill bond, considering the risk factor in our credit environment, and which has yielded 15% growth of investment income during this period. Commission, exchange brokerage, and other operating income is almost flat. Total operating income has gone up by 10%. Incremental total operating income is almost 100 crores, 99 crore during this period. And operating expense, this is another area I would like to highlight, that during these 9 months, where you'll be seeing that the operating expense of Fair Banks has gone up significantly. This was one of our focus area. We have been able to control this operating expense significantly, and despite incremental salaries and allowances to the employees of this bank, on overall basis, operating expense has not gone up in 2019. I think we are very focused from the beginning of this 2019 to control this operating expense, and thus we have been able to avoid certain operating expense in 2019. So if we sum up all this together, this has been resulted into 25% growth of operating profit from 398 crore in Q3 2018 to 497 crore in Q3 2019. Provision for non-performing assets, including provision for loans and advances, has come down slightly by 4%, meaning we are maintaining our provision for impaired asset almost at the same level. In this Q3, we made 130 crore as provision for non-performing assets. we are maintaining provision at this level because we would like to make our balance sheet very solid and robust. And provision for taxes has gone up significantly from 140 crore to 212 crore. Is a 51% incremental provision we made for taxes. And there are basically reasons behind this incremental 72 crore of provision for taxes. Number one reason is, as I explained, we made incremental operating profit of almost 100 crore. So tax impact on that incremental profit is 37.5 crore. And in Q3, we have been able to recover more money out of our return of loan. And as you understand that return of loan is admissible expenses as per tax law of the country. So recovery is taxable. 9.5 crore incremental tax has come out of this incremental recovery out of return of loan, and 25 crore is basically last year we wrote off a significant amount of loan in Q3 2018. So these are the three reasons: 9.5 crore, 37.5 crore, and 25 crore. It comes 72 crore. So finally, on profitability, net profit after tax has gone up by 27% on solo basis, but 17% on consolidated basis. As we told, we have 5 subsidiary companies. As you understand, we are facing a little bit challenge in the capital market of Bangladesh. So from the subsidiary involved in the capital market suffered a loss of around 11 crore, and that's the main reason of this NPAT growth of 17% this year. On this slide, I have shown year-on-year operating profit trend. If you go through these bars, you'll be seeing starting from 2014, then 2015, 16, and 17, it was a significant downtrend of operating profit. 2018 is the first year when we have been able to arrest this downtrend, and we have been able to make a uptrend of operating profit. And 2019 also, if you see Q3 operating profit in 2019, we have been able to maintain this uptrend momentum on operating profit. And on the extreme right side, I have shown operating profit on month-on-month basis, and in every month of 2019, we have been able to beat the same month of 2018. It shows that our operating profit is really sustainable in 2019, and we will be able to keep this growth momentum moving forward. Earnings per share, it has grown by 27% from 1.08 to 1.37 on solo basis, and on consolidated basis, EPS in Q3 2019 is 1.34. Return on asset has improved slightly from 0.56% to 0.68%. Net asset value per share has gone up by 4%. Return on equity has gone up by 1.3% from 6.53 to 7.86%. And most importantly, cost-income ratio has come down significantly from 57.56% to 52.10%. On deposit side, our current period-end deposit is 20,988 crore, which means we have been able to grow on deposit book by more than 1,000 crore. 1,236 crore to be specific. And if we go through the yearly trend, this is the first year I think we have been able to cross almost 21,000. 2015 it was something around 19,000 crore. 2016 it was 19,800 crore. But this is the first year where we are very close to 21,000 crore. Our CASA has also improved by around 332 crore. As you understand, we did not offer very high interest rate in the deposit market because we focused on, that was kind of part of our strategy. We did not want to grow our deposit book backed by very high cost deposit. On lending side, period end loans and advances is almost 21,000 crore, which is registering 2% growth versus 2018. Again, we are focusing on qualitative growth instead of quantitative growth on loans and advances, and we have duly considered the risk environment, environment in our banking business. NPL has slightly gone up from 6.16% to 6.63%. We have also increased the coverage of this NPL from 65% to 72%. Return of loan, as you understand, as part of our long-term strategy, we would like to clean our book, and as part of that, in last couple of years, the return of book size was very significant, and currently our net return of loan is 2,159 crore. Out of that, cash recovery during this period was 39 crore. That's our PAN Bank financials.
If you just allow me to summarize a few points that I just want to take the opportunity to summarize on few points of the results that we have just presented for Q3. From the very beginning of the presentation, you must have seen that it has been a very strongly coordinated approach that we have been having for the PAN Bank. All guns have been tried to be, firing at the same time. Not necessarily that we can proudly say that all the guns have been fired at the same expected level, but the good thing is that the key points that I want to touch on, that as a bank we have been able to arrest our operating expenses, which is very important for us in today's era especially, which has given us the jaw to be improving, because when we were having a 10% increase on the total operating income with a static operating expenses, that has resulted in that 25% increase in the operating profit. So for us, that has been very key element, that we want to arrest the operating expenses and further lower it by bringing in more efficiency, by bringing in more digitized processes and everything, and look into every pocket of the expenses and see how we can reduce them. That is one of the aspects. The other aspect that I want to touch on is the NPL side of the bank. The recovery side, as Habib has just mentioned, that we have been able to recover, if you can go to that slide, the recovery slide. Yeah, 39 crore we have been able to recover out of the written off book. There has been a very strong coordinated effort all throughout the year. There are a couple of accounts, and given the judicial system, given the handicaps that we have also, which is prevalent for n number of years now, and we all know the reality is very tight, and given the regulatory changes and given the credit climate and everything, the tight scenario, we have been able to recover a lot of money from a lot of non-performing accounts. But at the same time, we have been very cautious. The point that I wanted to touch on is that we have been very cautious in terms of increasing our credit book or the loans and advances book, and we had been very cautious in terms of the assessment of the risk. The due diligence process that we have been strengthening over the last couple of years, that has started giving us the results now, where we have been able to arrest any kind of surprises. I mean, we are not looking at surprises anymore. There have been one or two slip-ups, and what we have done is that we have arrested those cases on a standalone basis, and we have even done accountability reviews just to ensure that nothing as such is repeated in the near future or going forward. So the risk assessment or the due diligence process has been strengthened up to ensure that in the current credit climate, we judge very prudently that who are we banking with. And as we have mentioned in our previous sessions as well, that from the wholesale banking side, we are trying to consolidate our position, and on the large names, we are trying to consolidate our position and not to enhance our position or not to enhance our limits very significantly with single large names. Rather distribute it, rather underwrite very profitable transactions only. So the coordinated effort from the wholesale bank team has been to look at the profitability of the transactions. So if you can just get into the segmental performance now.
Right. Thank you. On segmental performance, on pan bank basis, as I said, deposit growth was 6%. Out of this 6%, CNIB growth rate on deposit was 15%, CBD 6%, MSME 4%, and consumer bank 4%. And our market share on total deposit of the country is almost 2%. On loans and advance side, as Rahil Bhai already mentioned that though the growth rate is 2%, but our focus was on quality of loans and advance, not the quantity. And CNIB grown at 4%, CBD is almost flat, MSME has grown by 2%, and consumers growth rate was in negative territory by 4%. On import side, we have grown 9% at pan bank level, where CNIB growth rate was 13%, CBD is slightly down by 3%, and MSME has grown by 13%. And our prime bank's market share on country's import is 4.11%. So the base is, I'll say, is significantly high, which is almost 1.7 billion. On export side, pan bank growth was 0.4%, which represents $1.2 billion US dollar, and our market share is 4.22% on export side. CNIB has grown 5% on export, and CBD has grown by around 3%. And MSME has come down from 72 million US dollar to 27 million US dollar. Remittance in Q3 2019 has gone up by almost 31%, and we are growing on remittance side, remittance space starting from 2016, 17, and 18, and we'll be able to keep this momentum in 2019 also, and probably our forecast is at the end of the year we'll be able to mobilize this remittance. Probably that will be exceeding something around 700 million US dollar. On capital, as you know, Prime Bank has highest capital in the banking industry in Bangladesh. Our capital adequacy ratio is 16.58%, where Tier 1 capital is 10.5%. The regulatory requirement is only 12.5% in 2019. That's all from my side on financials. I think if you want to summary, yeah.
I would just want to, if you can just go back to the slides on the business segments. Just want to touch on some of the points here, I mean, as a point of clarification. Our strategy has always been for last 2 years, as we said, I mean, when you looked at the operating profit trend, as Habib showed it, that between 13 to 17, there was a kind of downward trend. That was very simply, reason was that we were going through a consolidation phase. At the same time, we were going through a transformation phase for the bank. And as we have repeatedly mentioned, that it was more of a deliberate attempt to slow down on the business and kind of consolidate the business and rather not accelerate the business at, during those years, because we were trying to lay down the processes, the platforms with regards to the transformation that the bank has gone through. We can proudly say that on the wholesale bank side, since 2017 end onwards, we have been able to reap the benefits or get the fruits of those transformation. And that has been reflected in 2018 onwards, the results of CNIB, as we call it, the large corporates and state-owned enterprises are comprising of, which is corporate and institutional banking. And the other major part is commercial banking division. As I mentioned, that commercial banking division has not been able to fire its gun at the full bloom as yet, but the potential is very much there. We have been tweaking around with the strategy and everything, and we expect and we know for sure that the projected growth in that segment or in that division is going to be impressive over the next 12 to 18 months. At the same time, the MSME, which has been a very critical piece for the bank, and the consumer banking, I just want to take a minute or two on this point, is that the growth, especially on the advances side or on the asset side, to have a sustainable growth on MSME or consumer banking, it's not possible overnight. Because we as a bank, we wanted to do it in the right manner, as we always do things right, and we do it a little late possibly, but we do it in the right manner. And that has always been beneficial for us. Both in cases of MSME and consumer, in terms of the people, in terms of the processes, in terms of the system and platform, we wanted to have a robust infra in place. And that has been taking a lot of time, and especially between 2017 till now, we have been laying down the processes and platforms in both these areas. On the MSME side, to be very honest, the way that we handle the business is through two channels. One is the central sales channel, and the other one is through our branch distribution. And as a part of the change management, because we have 146 branches all around the country as we speak, but since we have already gone through a transformation phase where the branches have now been relieved from the wholesale banking business, and they are now further geared more towards driving the consumer banking business and the MSME business, what we have seen as a part of the change management, that the branch distribution has not fired its gun, both in terms of booking the MSME and consumer banking assets as to part the expected level. That is an area where we are strongly working on. We are trying to look at the gaps and see how we can mitigate those gaps and how we can, further strengthen that area. Because in both cases of consumer and MSME, we have seen the central sales team have been doing, have been exceeding their targeted level. So that is an area where we are seriously working on, and we expect that within next 6 to 12 months' time, both in case of MSME and consumer, those two, the channels of our branch distribution network will be gearing up and giving us more results. The best thing that has happened in last 12 months, especially YTD 2019, is in terms of gathering the deposits, and which Habib was mentioning, that in the tight liquidity scenario, as a bank, we have been able to gather almost 1,200 plus crore deposits. And that is also not, through compromising the rates or not through increasing the cost for the bank. Uh, that has been possible, and at the same time, the CASA drive, which is Pan Bank, it's a kind of virus that has been thrown out, or everybody has been infected by that virus, that we have to go and gather more of CASA as much as possible. So we can, kind of reduce our reliance on the wholesale bank deposits, which can be, at times, the institutional deposits are pretty expensive at times, and we are seeing good results on that front. On the consumer banking side, I just want to touch base on few points, is that in terms of the infrastructure, as we are seeing, I mean, we have very recently, which is very critical, these are critical factors in, getting the momentum in consumer banking, is one major area where we have done a major improvement is the call center. And that is directly related or linked to the service excellence, which is the basic foundation for, creating momentum on the consumer banking side. And the call center side, we have kind of introduced a very efficient and robust call center platform. And we have been seeing results in last 2 months that how things are improving on that front. We are also gearing up on our credit card business. Very soon you'll be seeing a lot of more changes on the credit card business. And that will be another major driving factor for the consumer banking business. The employee banking piece has been very strongly geared up. The wholesale bank is joining hands with the consumer bank, employee banking or the EB team, and the results are being seen. I would just request Mahfouz to touch on the numbers just for your information on these two things.
As you have rightly pointed out, that to grow the consumer banking business, there are a few areas where we need to concentrate. One of them is employee banking area. Just to give you a sense, in last quarter, the payroll banking team till September opened up more than 8,000 new accounts with 34 new companies onboarded under the payroll agreement. Just to give you the salary disbursement averaged at around 65 to 67 crore during first half of this year, which have crossed 100 crore in, which means significant salary disbursement payroll banking initiatives. Generation, as our CFO and managing director have already pointed out, from the very beginning of this year, we focused to bring in new fund into consumer banking portfolio because for the bank, the driving force is basically the deposit generation leg is basically the consumer bank. In first half of the year, till September, we could grow our deposit base from the consumer banking side by 458 crore, which is a growth of 4% of the base that we have. At the same time, from the Monarch side, our priority banking proposition, we have grown our portfolio by 127 crore in Q3. In terms of other few numbers, very quickly, is during January 2019, we used to open on an average 3,000 CASA accounts per month with an average volume of 18 to 20 crore. In September 2019, we ended up opening up almost 6,000 CASA account per month with a deposit volume of 38 to 40 crores. I think these are the few numbers that I wanted to highlight about consumer bank.
Thank you, Mahfouz. I mean, I believe the numbers that he has just mentioned, it only tells us that whatever we have been doing for last one and a half year, that has been giving us results now. And on the asset side for consumer and SME or for that wholesale bank, you must have already seen that the growth that we have registered is a very decent growth, and that has been a deliberate strategy for the bank, not to aggressively book assets, rather look at the risk and do the proper due diligence. One other area that I want to touch on before we get into the question answer part is a major area for the bank where we have been working on and where we are kind of accelerating our work at the moment. If you recall that we mentioned in our earlier earning call as well, that we are going through a business process reengineering for the bank, and that has kind of accelerated now, and that is hand in hand is working with the digital transformation for the bank. We are going in for a mega or a major digital transformation for the bank, and that is the future, if not the present, as we say. We are looking into processes, and there are tools, there are processes, there are systems which are being upgraded as we speak, and that is going to touch all the areas of the bank, all the people of the bank, and all the processes of the bank. And that is directly and indirectly, both ways, going to significantly accelerate both in terms of increasing our top line as well as either consolidate or kind of improve on the operating expenses side as well. So that is the future that we hold. Another major area where we are going to come very soon, we mentioned about it in the last earning call, is the agent banking area. And we are going to kick off with our agent banking proposition very soon. It's going to be a little different from what the others have so far been doing. And again, that will be a mix of, the digital and the non-digital part of it. With no further major expansion of brick and mortar branch model, we want to expand our reach to gather more deposits or to make it, more inclusive for the bank. Let's get into the question and answer session now.
Yeah. So, okay, the first question, what we are getting is your NPL 6.36% is based on new relaxed classification or earlier classification system. To answer these questions, our NPL 6.36% is based on new classification rules of the central bank. Second question is, what's your view on interest rate movement? How much change, increase or decrease we can expect in next 12 months?
I wish I could predict it exactly how it will go like, but given the current circumstances, for the very short term as it appears, as we discuss in our ALCO as well very extensively, that the interest rate is possibly going to ease out for the time being. But how it is going to behave in the longer term, it all depends on various functions, obviously. Given the projection in terms of the government spending and the projected private sector credit growth, if it goes beyond what it is today, then definitely there will be a kind of tightness in the liquidity, and that may result in a little bit increase on the interest side again.
The next question is, why corporate loan growth is very slow in the economy? Is it supply side impact or because of lower demand?
Go ahead.
Yeah.
Yeah.
To be very precise, I think it is more of lower demand in the market. Liquidity scenario as of today is not very tight, I will say, because you have already seen that our AD ratio is 78% versus regulatory requirement of 85%. So at this moment, I think the corporate loan growth slow is mainly because of lower demand. Yep.
Next to the junior. On this point?
Yeah.
No, I think you have summarized it well. I mean, as I totally agree with you.
Okay, right. The next question is, can private sector credit growth go below 10%?
Well, I think for the nation, for the economy, that would definitely not be a good thing. So let's not predict it negatively. Let's see things positively. And I think whatever credit growth slowdown we are seeing is a very temporary phenomena. And going into the new year of 2020, things should be looking much better than what it is as we speak.
Right. The next question is what NPL would have been if it were to follow earlier classification system. I think it would not be significantly different than what we have as of today, which is 6.36%. Maybe it would vary by around say 15 to 20 basis point only. Yep. Any more question? Can you get refreshed?
Any other questions in the meantime?
Yeah, I think 45 minutes already.
I guess, there is another question. What is your strategy to bring down NPL percentage further?
आपने बोले देन.
Rabbani bhai, would you like to shed some light on that?
Thank you very much. You know, in the recent past, the NPL has become a very warning issue. And up to October, we have so far recovered 255 crore from the NPL account. And the MD Sahib has already said more than 39 crore from written account. We have set a target to bring down the CL ratio below 5% within 31/12/2019, and management has set topmost priority on reducing NPL. Thank you very much.
I would like to add some
Sure,
points
please.
with Rabbani bhai. I think our main strategy is to strengthen our credit appraisal process so that new NPL doesn't come in, and for that we are investing a lot in people, and we are also giving significant focus on our recovery side, and I think on that area also we are investing a lot, because as you understand that our return of loan size is relatively on the higher side. So this is one of the area we are focusing on, so that we can improve our profitability, and thus we can maximize our wealth. Next.
There's another question.
Yeah, there is another question. Net profit is 154 crore, out of which recovery from previously written off is 39 crore. So actually bank's net is 115 crore. What is your view? No, I'd like to differ a little bit, because as per IFRS, the recovery out of this return of loan doesn't it impacts our provision line. I think recovery from return of loan is in NPAT, which is okay. Do you want to add anything to this?
No, that's fair enough. I
Yeah.
mean, that's how
Yeah,
it is. I mean,
it is, yeah.
calling a spade a spade.
Yeah.
Is there any other question in between? While we wait for another couple of questions, maybe just to pop in next few minutes, I just want to summarize once again and thank. I want to take this opportunity to thank our board of directors, all our stakeholders, and especially each member of Prime Bank team for their contribution in registering quarter-to-quarter basis this positive growth, which we believe is very, very impressive as compared to many of our peer banks playing in the market. As we like to always say that we are not into newsmakers. We are not newsmakers like many others, but we try to be a silent killer and we want to do things right, and we want to do things slowly but in the right manner. We have always been pioneering in many of the areas of the banking industry, and we have fared out this bad weather that we have seen in last 3-4 years, and since 2018 onwards, we have only been seeing the positives. And as Habib was mentioning, and also a couple of my other colleagues have already mentioned, that the process and the system and the capacity that we have built over last almost 18 months now is going to give us the benefits over the coming months and over the coming years, because we don't want to aggressively grow our books, or we don't want to aggressively register very high profit growth numbers. Rather, we want to concentrate and be very diligent, or be very cognizant of the risk management part of it, and make a quality and sustainable profit growth for our stakeholders over the years to come.
We have one more question. Which sector is contributing more in NPL?
Rabbani Bhai, in terms of NPL, the sector, I think it is the commodity which has
It is
played.
the commodity
And another, if I'm not
and-
wrong, is another one
and
is
another
the
import.
no,
Arms and
another
textile.
one is we have, as a part of our legacy, we have had significant exposure at certain point of time in contractor financing, and few of the contractor financing accounts have gone bad over last 4-5 years, and that has been contributing to the NPL number.
One more question. Thank you so much for arranging the session. What would be the strategy for Prime Bank going forward, especially on loan and deposit growth? Which would be the growth driver, sector-wise?
If I just start answering from the first part of the question, what would the strategy be for Prime Bank going forward? I believe I have already covered that in my statement, that what is going to be our strategy. As a bank, our strategy, again, in a one-liner, I'm going to repeat it, is going to make sure that we have a sustainable profit growth for the bank. And we don't want to compromise on the risk management side. We don't want to compromise on the risk parameters, and rather be very stringent on that. In terms of deposit growth, the way, as I have mentioned, that we have already infected all our Prime Bank family members with the CASA virus, and that is going to grow. That is going to keep going, and that is going to be more and more stronger. So on the loan side, again, the growth area for next 2 to 3 years, as we want to see, is going to be consumer and SME. It takes a bit of time. It doesn't happen overnight. And on the wholesale bank side, it is going to be the commercial banking division, where we want to see the growth in the loan numbers. Which would be the growth driver sector? If I think I've already touched on that.
Yeah, I think I just would like to add is that moving forward, I think the bank strategy will be to build capacity in every front, on people, process, and especially on digital arena. And I think our growth driver, if we consider in the long run, should be our deposit book, which is CASA. The next question is, do you plan to have external rating? We have already external rating agency who rates us pen bank wise. Yeah.
Any other question in the meantime?
I think we should close it. We should 15
Yep. I think that's it for now. And as we mentioned earlier too, I mean, you feel free to send your questions through email to us, and we'll be happy to answer all of them. And if you want to make direct calls and speak to us, you can either speak to me or our CFO on any of the points that is in your mind. Thank you once again to all our stakeholders for attending this session, and thank you to all my colleagues present here once again, and thank you to all the members of Prime Bank family once again. And we can only assure you that given the trend, 2019 is definitely going to be another very good, remarkable year for Prime Bank. And we are going to close the year in a very positive note. Thank you so much.